All right, all right, all right. All right, all right. Good morning, MMU. Good morning, ladies and gentlemen. Good morning, traders. Welcome back to another Q&A session, a Sunday Q&A at that. I was thinking about making this a public Q&A and including the entire community, but I decided to keep it strictly MMU here. And what I might do afterwards is start up a different Q&A session for the masses if I decide to do so. It's been a long time since I've done a full-on Sunday Q&A on the YouTube channel. So let me check in. Let me see how many people are tuning in. What's up, guys? Parjan, good to see you. The man, 10x trading in the building. How you doing today, man? So we got a couple of questions that I'll start off with from the Q&A section on the page here from Discord. So let's pull this over. There we go. And it looks like I got a couple of messages there I can reply to later. But yeah, so I am now paper trading from Hong Kong. I have some free platforms, TOS, Webull, Schwab, but they are all too slow to execute scalp trades. Some take 10 to 30 seconds. Wow, 10 to 30 seconds? Really? Is it because of distance or is it something else? Do you think linking up DAS Trader with Thinkorswim will improve the speed at all? I'm using IB to paper trade, which is fast, but projected commissions are too much to be sustainable. So yeah, when you link up the DAS platform, unfortunately, because you are connecting it to a broker that's non-direct access routing, you'll still get the same speed of fills that is the original broker, right? That the platform is assigned to. So if you're connected to Thinkorswim, you're gonna get the similar type of speed that Thinkorswim dishes out. And it could even be a little less, to be honest, because you're including a third-party service versus just the servers in Thinkorswim just sending straight to the market makers. There's now Dash, Thinkorswim, and then the market makers. So keep in mind, guys, that if you're using the DAS trading platform, it does not give you faster fills. It gives you better hotkeys. Similar speed in fills, but better hotkeys. All right, and it looks like Marcelo actually responded to this one. Was it this one? To get through, I have a base knowledge. Would you recommend that I focus on the edges section? Was this? Okay, this doesn't look like it's a response to this. This looks like it's a little bit of a different statement here from something else. But yeah, anyhow, it's coming down. How can you tell right before stock goes into a halt? Okay, let's take a look. This can be best explained with an example. Guys, feel free to look at the course and the classes on halts and halt levels. But I will show an example here. I'm trying to think of a day where we had a halt, which is usually most days. Okay, HE, halting down. Okay, so stock HE, right hand side of the screen, stock HE, just for a little bit of context, we had a high point around 1480. It's currently pulling back and coming down. Level 2, we got 1378 by 1381, and this thing is pulling back. And so the first thing that we see when we're using the DAS trading level 2 is the actual halt levels themselves. So we see that if we come down to 1361, that the halt down is at that price point. So let's watch. As we get closer and closer, we're right at the price point now. The bids are at 61 and the ask price is also at 61. And so a lot of the times what you'll see is sellers coming in on the ask right at the level, and there's green on the tape because there are some people still buying. In this particular case, it's hard to sell. It's hard to sell in this particular case, but a lot of the times people are buying because of the orders that are sitting on the ask. So this is why whenever stock flushes down into the halt, sometimes you unfortunately have to hold through it because there's not enough liquidity to get out. But anyhows, and it's the opposite of when a stock is halting up. When a stock is halting up, there's a lot of big bids right at the halt level, and so there's a lot of red on the tape because people are selling, taking profits. Sometimes people are here trying to buy the dip. So we're essentially at the same price on the bid and the ask, and if we hold in here for 15 seconds, the stock is then halted and locked in. What you can see, or let's say how you can know if there's about to be a false halt is if there's a ton of buying coming in, tremendous amount of buying coming in to the point where the sellers start to thin out and we get back to 62. The halt is no longer being locked in. Right here, despite the buying, you can see that the sellers there are thinning out a little bit, but it's holding firm. 15 seconds will go by and then it'll be locked in. And if you guys want, we can actually go back and count. It should be around 15 seconds. But yeah, there you go. The halt is locked in. So whenever the stock goes up or down too much, we get to the halt level, and from there, depending on if it's halting up or down, we're at the level they'll be buying or selling. And if we hold at the level for 15 seconds, we will be locked in. So that's how you can tell if a stock is about to get halted. Answering that one there with an example. Any pointers and tips to how to increase risk to reward when micro scalping, trying to aim for 2-to-1 consistently? Pointers and tips on how to increase risk to reward. Risk to reward. So ideally, we'll say 2-to-1. And let's kind of go to trader view here. Hold on. Where is it? Where is my trader view? Oh, yeah, right here. Jeez, I'm going crazy. Can you look at August, since we kind of just went through this month? But I actually finished up with a profit factor of about 1.32. So I still need to keep working. And, it's not a perfect world. Whilst we aim for 2-to-1, there'll be a day where you get caught in a bigger flush. It throws off the risk in the trade. You're just risking 5-10 cents, you end up losing 30-40 cents. So despite us aiming for the 2-to-1 at times, sometimes you'll fall short. But anyhow, to potentially give yourself a better chance, it comes down to the quality of the setup and the indicators. So we get back to the charting. You're looking at you look at a stock like EDBL and you're watching at it. Let's come down. First potential opportunity that we have here is the red to green in the form of the 1-minute candle making the new high. We started off a little red, high point of 165, and now we're curling back up. So when you're looking at increasing the risk to reward ratio, or let's just say improving on it, you want to make sure that the setups that you're looking for are the best. Because a lot of the times, even in my case last Friday that just passed, sometimes we trade poor setups, poor stocks. I traded stock ICCT instead of watching at this one earlier on. ICCT, for example, this is what the stock is looking like. It's on the backside ever since getting to that high point of 42. So despite being halted up, the odds of this being extremely strong to hold up and continue to go is just unlikely. And I think just being selective, aiming for the best possible setups that we have available to us will give us a chance to increase our accuracy, and then in turn, increasing our profit loss ratio, because it's just more follow through will definitely help us to keep to a tight, risk to reward in terms of winning trades, especially. Again, there'll be slippage sometimes, but the odds of the probability being in your favor will be higher if you're being selective to trade the stronger stocks, the stronger opportunities. Paying attention to your indicators, not taking trades below key levels such as VWAP, the 200 EMA, when we're in proximity, if we're realizing that there's resistance, right, via level two, or just the price action being choppy from just watching at the stock. So things like this, and I ended up losing 50 cents on this stock. Why? It's sometimes the small things like that that in turn helps out your metrics in the case of like a win loss ratio, profit loss ratio. So a lot of the small things, right? Being disciplined about what we trade, and that will definitely help out. So some people also, depending on, if they like to trade the 5 minute pattern more, in that particular case, I find that let's say the risk to reward ratio is usually higher and bigger, right? So we're buying close to support, and I guess this can apply even to the scalp trades, but generally we want to be buying very close to support, which means our stop in the trade is not as wide. And if you're in close to support, you're basically in at the, let's say at the bottom or close to the bottom, and then you're watching for the stock to crawl back up. And usually we're watching at high of day as our reward. So if there's a big pullback, let's say we're at 5, we drop down to 4, we're in around, let's say 405, 410, we're risking 10, 15 cents, but our reward is about 80, 90 cents back to high of day, for the stock to get back and make a new high. So in that case, it's like you have like a 9 to 1, a 8 to 1, a 7 to 1, rather than just a 2 to 1. And so I guess, generally just, even for those of us scalping, trying to buy more so towards support, in which case we're in low and the stock is going higher. So yeah, just being selective, aiming for the best and obvious stocks, being quick about getting in towards support, and watching for that reward back to the upside. Any advice on spotting extended pullbacks? What does it look like on either the chart or level 2? Any examples or videos that come in mind? I think we answered this question last week, right? This was one of the questions we had last week, I think, or a similar question. So we can definitely put some pointers back out there. So when a stock is too extended, how do you know when a stock is too extended? Let's pull up the charts. EDBL. Candlesticks are important. You got to watch out for reversal candlesticks is one of the obvious signs. Volume. And I will throw this in there too. I know a lot of people don't like it, but a little bit of experience also. Because the more you start to see stocks go crazy, the more you'll understand when it's like a little too crazy, a little too high up, right? And some of it has to do with your risk tolerance too. Like, at times I'll be trading a stock that some people deem too high, and then there'll be days where I even stop trading a stock that other people are still trading. For example, I think like ADTX, some of the other stocks like that, some of the guys in the chat still trading. I'm like, there's no way I'm touching it, But anyhow, significant candlesticks in volume. Let's talk about it. So right here, we pushed up, we had a halt, and like note how this stock had been moving, right? It's just been all green candles. It's just been steady. It's just been steady. So let's throw a hypothetical situation out there. Let's say you're in low. You bought shares around 160, and you're just watching this thing for something obvious to get out. Let's say as your selling point. All right. So it comes up. Initially, this is the first thing that we see. There's a small wick up here, but the volume is still high. The volume is still increasing. Okay, let's say you don't stop out. You're still watching. We come up here. We've got our first red candle. Essentially you're watching for like a change in trend in the short term. This in itself could be an area to watch. We start making new lows below this candle here, especially you're watching like, man, are we starting to see some weakness? So when we get all the way up here and we see this red candle, this is our first sign of trouble, because throughout the history of the stock in the short term, we have yet to have a bearish engulfing candlestick. The bearish engulfing is, of course, when we have a green candle, good sized body, but then a red candle that consumes that previous green candle and being bigger. And so that's essentially what we had right here. And this is our first sign of reversal. I think it's the first obvious sign. The other, the other candles here is mentioned a little bit of a topping wick, our first red candle for a pullback after a while. But even here, you want to be careful, make sure we don't continue to make new lows. But it keeps going. But right here, I think it's more obvious. Like, okay, we just went up, in good fashion, because you ask yourself, you know, what's now preventing the stock from going? Because this move here after this quick pullback, after this quick pullback, these two green candles have been exactly what we've been seeing, which then led to even more green candles, right? This just kept going. Well, at least before right here, this just kept going. So shouldn't we keep going, right? That's kind of the question here. So when we start to pull back and engulf that last candle, this is where you have to say, okay, maybe this thing might be taking a bigger, bigger pause, a bigger break. Even here, after the resumption, opening lower in itself was some weakness too. Curling up was good, but we definitely don't want to see this type of rejection here, let's say. So it tells me that somebody probably started to sell who had big size. They just said, you know what, this thing is up more than enough. I'm going to start taking profits. Sometimes it'll be a topping wick candle. I mean, if we look at the 5 minute, it's more like that. Let's see. Yeah, if we look at the 5 minute, it's a little bit more clear here. Like, look at this candlestick versus the other candlestick going up. It's like this is a sign of trouble. So right here, if we're still in holding from low, it's like, okay, you know what? I'm not selling at the very high, but at least I can get out. And this has a lot of volume for a red candle. In fact, it's high of day volume on a red candle, which is not great. We want high of day volume on a green candle and lower volume on the pullback. So volume, candlesticks, and then of course a little bit of experience over time, it becomes a little bit better uh, in understanding. It also comes down to understanding yourself too, because you have to feel comfortable. Like if you don't feel comfortable, you start to hesitate, and then that leads to problems, right? Because we have to be sharp, quick, firm. Coming down to the next question. Did I put? Yeah, I did put the checks. And I check on the YouTube's chat as well to see if there's anything on the live stream coming in. I don't know when to raise size from small shares. Also, I'm still struggling to buy dips and hold until enough of a bounce. I usually sell too early on dip buys. I know it's all about experience, but psychologically it's killing me. Any tips would be helping me, right? Would be helpful. So yeah, I definitely feel this one. When I first started trying to buy dips, it was a nightmare for me, man, because I was so used to just buying high, selling higher into a push. When I started trading in 2020, the summer months, it was a good couple of months for breakout trading. And that's all I was doing, buying the new high, buying the new high, scalping higher. So first things first, is going to come down to mentality. You have to continue to work on yourself mentally. Whether that might mean meditation, um, you know, simulating trades in your mind. You have to continue to try and become more comfortable buying lower, because so much of what we're doing is the brain power. You got to try and get yourself to feel comfortable in that area, and even if it means sizing down a little bit more to try and gain the consistency before then trying to size up again. But you want to make sure that you're doing it consistently. Every time that you see a potential entry for one of the edges, whether it's the panic flush, the VWAP bounce, the dip, then the rip, whatever it might mean, you want to become consistent with being in when you see the entries from the classes, the edges, once you see the edges. So if it might mean sizing down first, I think that's good, because then when you start to connect, usually that's what gives you the confidence to size up, is that you're doing the same thing over and over and you see that it's working. And you say, you know what, instead of 50 shares, instead of 5 shares, I'm going to go to 100, 200, 300, 500, 1,000. So Psychology is important, guys. You know, trading sometimes is like mental warfare. Even when it comes to cutting losses, it's like we know we should do these things, but then we don't. There's some sort of barrier preventing us from doing what we know is right in the moment, you know? And it's one of the harder things to master, our own emotions. Sometimes it's fear, you know, but we have to be courageous. You know, even myself, when I hesitate, we have to be courageous and understand that on the other side of that risk is the reward. And you know, if you can master yourself, if you can have the confidence to continue to buy, even when it seems scary, you know, that's how you give yourself a good chance at becoming a great trader. You know, the risk is always going to be present, but the reward is also on the other side. So we're risk first, and we understand that. So we, you know, we can approach it with small size, as mentioned, build the consistency, and then size up slowly over that time. So, let's see. Have you ever come close to blowing up your account? How and what are several ways people do blow up accounts? I came, I wouldn't say that I was close to blowing up my account, but I was very emotionally hijacked at one point in my trading career, and I'll never forget it. So I was in a simulation still, and you know, I told the story a couple of times. I'll tell it again. There was a day where one of my siblings, right? I have a brother that trades, right? He's just not, you know, as public as I am. He's just doing his own thing. But, you know, he had came with his traveling setup to my place. And we traded together. It was a slow day. We're both green. And we're both like, let's shut it down. There's nothing moving. You know, he left and I kept trading. I went red. And he came back and he's like, man, what are you doing? Like we both knew it was a slow day. And you know, that particular month was my first month of trying to set a monthly goal. This is why you guys never hear me saying anything about a monthly goal ever, my, you know, right now. I tried to set a monthly goal, and that day I ended up finishing red, and it kind of put me behind a little bit. And, you know, I don't know why, man, but I think just because of like having somebody else there, them doing the right thing, me knowing that that was the right thing, and then doing the opposite, it kind of frustrated me. Like I should have been better. And the Monday came in, and it was just straight revenge trading. Just awfulness, awful, just terrible. You know, not trading the market that I was in, just trading off of the feelings that I was behind and needed to catch up, pushing big size, and just losing in a terrible market, slow market. And it became to the point where I came back on Tuesday. I was down like Friday, I was down like 150 or 250 or something. The Monday, I was down like 900. The Tuesday, I was down like 800. Then the Wednesday, I was down like 900 again. And it's like with the size I was pushing, if I would have gotten caught in a flush, it'd been down like 3,000, 4,000. And so I had to stop trading. I had to like, it became to the point where it's like, man, I am a, I'm not recognizing who I am when I'm trading. Like what in the world am I doing? And I have to ask myself, am I capable? Like, am I capable of doing this? And it was more than trading, right? It's more, am I capable of being successful? Because that's how deep it needs to be. Like, you know, we all have different backgrounds, different experiences, different cultures. We're all unique in our own way. But at the end of the day, we know what it is that we're dreaming for, the visions that we have for ourselves, the level of success that we have for ourselves. And it became to the point where I had to ask myself, are you capable of even being successful? Because right now you're doing the opposite of what a successful person would do in the situation. And I looked myself in the mirror and I had to remind myself of who I was. And I had to remind myself that I'm a winner. I have to remind myself that I'm capable. I'm capable of being disciplined. I'm capable of coming out on the other side despite of hardship and adversity. And so, I went into the backyard that day. The tears came out of my eyes, man. Even now when I think back about it, the emotions, and like now it's not like even then back in the yard, it's like it wasn't frustration. It's more so the wanting to prove myself to me. Like I could do it. I could do it. I can. I can. I've done it in other fields. I've done it, I've done it in school where I went from just being C student to becoming an A student. I've done it whilst playing video games, from being like an amateur player in the game to being like a high ranking player in the community. And it's like it's this thing where when you do see the error, you have to force yourself to make the change. That's the difference with some people like that will struggle. And it's not easy. It's not easy. It's not like it's hard, man. It's like the hardest thing that we have to, because even now being better, we have to keep doing it. It doesn't stop. Like if we decide, I'm just gonna take it easy tomorrow, it's like the chance of that stuff happening is still there. So it is a little stressful in that sense to some degree, but it's also what's necessary to be successful. If it's like if we want to become financially free, and for the people who want to become millionaires and multimillionaires and billionaires, like that's just part of the job description at this point, is that level of intensity, and if you want to say stress, that's going to ever be present, because this is what greatness is. You have to have some wide shoulders to burden the weight of what's in front of us and what we have to carry. So I put on my big boy pants, and I said I can do this. And I came back the next week, went back to my small size, and reminded myself of the perspective that it's not just about today and this week, but it's about the next couple of months, the next couple of years, the next 10 years, the next 20, 30, 40, 50 years. And what is 1 week of terrible trading, 1 week of me trading terrible, going to do in the grand scheme of trading? And then you start to realize, like, yeah, this was nonsense. I'm a little embarrassed. I'm a little ashamed that this trading came from me. But this moment is not going to define me. It's just a necessary step in the process of me being better. And so you can blow up your account by being emotionally hijacked. And there are other factors too, which is why we have to have redundancies and safety nets. You can blow up your account by accident. One of our students recently here, Spartan, had a mistake like that, right? It's an honest mistake. He's using DAS Trader level 2. The order entry window kind of switched. The quantity of his share size switched without him even noticing. Thought he was just getting in one share at a stock at $65 that was just halting up. And the talk in the Discord was like, hey, this thing might go to 166. So he's like, yeah, one share, if this thing just drops down like crazy, I'll only lose $30, whatever, who cares? He's having a great month. He accidentally goes in with 200 shares. And it just happened to be that was the last halt going up. It resumes higher and then instantly drops down $50 a share. Like, what are the odds, like, and things will happen. If you want to say good luck, bad luck, I call it randomness. Things will happen for us, things will happen against us. It's just life. You'll find $100 in the street, you'll lose $100 out of your wallet some other time, right? So sometimes on accident you can make an honest mistake, and that could literally lead to you blowing up your account. Now he lost 8,000, which is still a good amount, but up 5K in the month, you do the math, okay, you're down 3K. Your strategy isn't fundamentally flawed or anything. You just made an honest mistake. No big deal. But it could have been to the point where you lose your entire account like that. That's the risk of this field. your power could go out tomorrow. Let's say I decide to size up tomorrow in a big trade, and my power goes out. The internet on my phone isn't working well. It's like if it's a risky stock that's up and down, I can open up my computer 20 minutes later and be out 50 grand. It can happen like that. So one thing that we try and do is take cash out of our accounts, like things like that. Take out cash, like all the different ways we try and manage risk, so that even if something bad does happen, at least we don't lose it all. But yeah, long answer there in terms of like blowing up accounts. There's a story of a guy, his cat. This is how crazy it is. The guy cat goes up onto his desk and walks onto the keyboard and presses the hotkey. And I think back then you only had to press one key for your hotkey to be triggered. And it was like spacebar or something. The cat bought like 1 million shares or whatever. The guy comes back from getting his coffee or the bathroom break, whatever it was. His account is gone. And I think that story might have led to there being two buttons at the same time to initiate the hotkey. But don't quote me on that. But that cat story is a story that I heard before around the community. Just, I mean, it's pretty fragile because our cash is is insured like from theft and things like that, but not from us just having losing trades. Um, Also, yeah, yeah. Also, you have to be careful of it's slipping my mind. I was gonna say one other thing. Yeah, it's slipping my. But anyhow, yeah, that's the main thing, right? So just be careful out there, guys. Yeah, and here we go. I was gonna say like, other businesses they'll have some sort of hard assets. They'll have real estate. They'll have machinery. They'll have all these type of things. But with trading, okay, we have our keyboard, we have our computer, our monitors, but it's not that much compared to the cash that we have in the account. A lot of you guys will have 10,000, 20,000, $30,000 plus sometimes for over PDT. So moving on to the next question. For those of you who are tuning in, what's up? What's up? How's it going? I realize the speed of paper trading and the real trading are different. So I'm practicing on tiny amounts of shares now. Webull is fast, but the fills are not great, while Thinkorswim has PDT rule. So I'd recommend using the DAS Trader platform. The DAS Trader platform does have a simulation side where you can place the trades through DAS, and it's just as fast as if you were in a live account. So I would recommend using the DAS Trader platform, although it will cost you $150 a month. But guys, remember that we're looking at trading as a business, right? And I know, because I'm coming from this situation of where money wasn't really available to me, right? Even now, I'm not like a rich guy by any means, despite having like these bigger months. Not even close. So I get it, but we have to still find a way, and we have to also change the perspective of how we're looking at the money, right? Because sometimes we spend $150 on stuff that is not even going to benefit us. And at least that's how it was for me in a lot of situations. Like I'd go out somewhere, you know, spend 95 bucks on a meal, and then like you go to like a fancy restaurant or something, and then you go out for like an activity, maybe you go bowling or something like that, you spend another 50 bucks. That's one day. And yeah, enjoyment and these things are good, entertainment, but at the same time we still have to remember about investing into ourselves. And really and truly, 150 a month, it's like, if that's what it means for you to be able to trade fast in the sim to build the experience, it's not bad. It's, in fact, let's say it's nothing compared to, if you can get to where you need to be in this trading space, you know. And even over time, right? If you're filing your taxes, under an LLC or an entity, it's very possible you can write off these expenses. You can write off the course, you can write off the chat room, you can write off a platform like Dash Trader, right? But it's definitely worth it if it's for the benefit of yourself, investing into yourself. So despite 150 being a lot, it's also not a lot in the grand scheme of what it might mean on the ROI, right? The return on investment on yourself. When you are in a halt and hit flatten during the halt, do you sell at the market resumption price? This answer is yes. Yes, you do. I put a heart. Let's put a check. Yes. All right. So if the stock is halted and you hit the sell button, wherever the stock resumes, it'll give you that fill in that area, right? And I'm saying area because it's still a market order. It can still drop or go up, and then you get filled like a little higher or lower. Based on my experience, yes. Okay, so this is an answer to the question there. For beginner traders, what edge do you think is best to start with? I said this a couple times before, and I'll keep saying it. Guys, all the edges, it's like a matching set. They all work just as well, and they all fail just as much. Now, there will be times where some of them are reoccurring more, whether due to the time of which it requires for the setup to play out, or just if there's a trend going on. Like some patterns will occur more often. Let's say, for example, the baby pullback, the 3 bar play, like it only takes 3 minutes if the candlesticks are in the right formation, versus the 5 minute setup, which usually is coming from a stock that's pulling back from highs and holding up its levels or whatever. But you could say, like, okay, I'll say this, right? Like maybe, okay, the halt resumption edge might be a little bit more intense and volatile than some of the other patterns, but it still comes down to stock by stock basis, right? But yeah, other than that, all of them work just as well, all of them fail just as much. It's a matter of being disciplined, identifying the entry, cutting the loss if you have to, taking profits where you need to. Good morning, RT. Can you talk about the scanners for MMU members? I heard Mighty talking about limit up, limit down scanners on Lightspeed. Where would I find these? So this will be coming to the chat mid-September. So just like how I live stream and show like my charts and stuff, Marcelo will be live streaming. So over these last few weeks, he's been buying extra screens and an extra computer to live stream Momo Pro. I believe he's going to also live stream some trade ideas too, right? Momo Pro trade ideas, the halt levels for all the main stocks that we're watching at, and it's all going to be on one big screen. So if you guys, let's say you just want to see what else is moving or check out the halt levels, whatever it might be, you can check out that live stream, and then you can always jump back in to my live stream, right, in the Discord. So it's coming mid-September. Mid-September, it's going down. So August month metrics. So this is my first break-even month since I started trading seriously. That is April 2022. So I'm getting consistency, which I'm really happy about, and that's good to hear, man. It's great to hear, good to see. But my question is, since my daily max loss, hold on, let me go back a little bit. I'm really happy about it, but my question is, since my daily max loss and daily max win is $1, how can I increase my gains on days when market is hot? So, okay. Whenever I try to increase my size, I get knocked down. So, guys, share size is a very interesting thing. Let's say the increasing of share size is very interesting because a lot of the times we're trying to do it, but subliminally we become afraid. In fact, Marcelo had a huge red day. This actually aligns pretty well because Marcelo had a huge red day on Friday, right? I guarantee you guys, if Marcelo was not increasing size on Friday, Marcelo would have been nicely green, right? Especially if he saw the stock early. And I watched part of the recap. He was saying that he was hesitating at almost every area. He switched his hotkeys from about 3K and 4K up to like 5K, 6K, and he was hesitating on every single area. It's our brain. It's our mental, we have to increase our mental capacity and expand our comfort zone and become, you know, I hate to use the word again, but become comfortable and have it be normal the size that we're using and not be worried about the risk. What happens when we increase size a lot of the times is we know that we're carrying more weight and that we could hurt ourselves faster if the trade is to go against us. And so naturally, a lot of the times, the hesitation is real, man. And you might say, okay, you hesitate for a half second, whatever. No, that's the difference of you being green and being red on all the trades. A lot of the times, it's the speed at which you can execute and capture. And I mentioned this for myself, like in the monthly recap I just did too, that there's a lot of areas where I'm fumbling with my share size, mental distractions, things like that, and it's costing me in the trades because I watch back my trades, and I watch back my trades, and it's like, what in the heck was I doing? It's like when I watch it back, it's like there's no way that was me standing there trying to trade that stock because why was I not taking all these million entries that I'm seeing watching it back? But it's because in the moment when I'm there, I'm not where I need to be mentally. Like it's so crazy. Like the mental powers you need when you're here, it's insane. You have to be at peak, and I find it good to not have in-house distractions if possible. I understand everyone's situation is different. I used to trade from a living room at once upon a time ago. It's the living room. If someone wants to come and watch TV, it's the living room. Can't really say anything. So I get it if there is distractions, like you have to do what you have to do. But it's best if you can have that quiet place, that office or home office, whatever it might mean, and making sure that your routine each and every day is as good as possible. Being comfortable, being ready, being prepared, being on time, doing your due diligence. All of these things can help you, you know, be more focused and less distracted. And so, trading is already hard. Increasing size is already difficult. So we don't need any added distractions. But it's one of those things where you have to keep at it because if you get knocked down, you have to get up. And the day is gonna come where you do connect mentally. You're sharp as you need to be, and even if let's say, and sometimes we talked about the luck, the randomness. Maybe you're still a little hesitant, but you get in, and the trade has so much follow through that it pays you. And it's like the moment you connect one time with that size, and you gain the it's like you gain the cushion of the winner, and that also gives you confidence because now if you lose, you're not really giving back what you had or going red. You're only giving back from what you just made. It's such a weird psychology. If I go in with 5K shares and I instantly make 2,500, it's going to be so much easier to hit the buy button again with 5K shares versus if I buy 5K shares, I lose 2,500. I'm going to get discouraged, and I'm going to want to naturally be more cautious. Okay, I need to size back down. I need to ease off, make sure that I'm connecting because a lot of it is also, are you in tandem? Are you entwined? Are you connected to the stock that's moving? And so winning trades gives you that confidence. Sometimes it's not necessarily the money, really, but you still do know that you lost bigger than you would have usually lost. It's the psychology of it, but you got to keep going. You got to keep going, and when you connect mentally, you're gonna feel great, and you're gonna keep at it. You're gonna keep going, and it's gonna become normal. That's how you kind of expand. It becomes normal. And so you try it again. And before you know it, you get to a place where, you can either maintain, or maybe you even keep pushing till you get to the limits of the brokers that we're using. Can you show me an example of how to find support? I'm still having issues spotting support even after watching the class. Can you show another example? So, okay, let's pull something up. There's a few ways you can spot support, right? First, by using level 2. If the stock is pulling back, let's say it's been a big move, there's no obvious area where you feel like, there's like let's say like a pre-market high trend line, VWAP level. Let's say we pulled away from that area, similar to the stock that we were looking at earlier. On a stock like this, where we kind of go away from VWAP, like this pullback right here, for example, you ask yourself, like, how do you know where the low is going to be? Like, first and foremost, if you are using level 2, a lot of the times when the stock starts to pull back, there's a lot of selling. Like, the red on the tape is heavy. And then it gets to a place where it starts to slow down. The selling eases, almost as if the rain is coming to an end. And then the sun starts to shine a little bit, right? It peaks out. And there's some buying at the very lows. If you're using level 2 extensively, that's a way in potentially spotting the low. Although it's not, 100%. You guys will still see Marcelo and myself losing all the time. And that's why we try and keep the stops tight. If the stock wants to keep dipping, we can get back in. Also, it's why I like to use smaller size to help mitigate risk on the pullbacks. Naturally, I'm just more comfortable with breakouts. But that's one, right? By using level 2. 2 would be the trend lines and indicators, or let's say trend lines, depending on, let's say, pre-market high, previous high, any sort of key like pivot level that you might have on the charting, or in this case, daily trend lines as well. You can keep an eye on, but it's always good if you can have multiple of these factors indicating you to buy. If you have VWAP and a trend line, or all, and the level 2. But yeah, let's see if we can find an example here. I'll just pull up any random video and see if we can like find a trade at the lows. The halt resumption trades are not bad to watch for this type of stuff either. Whilst the resumption trades are more volatile, it's still kind of like the panic flush when we do start to dip. This was GRRR. Did I capture a good move here? Hold up. $6.29. We'll skip through the video too, just to see if we can find something else. And BBIG, I mean, look at this bottoming wick there. But maybe we can go back and see how we could have approached this one. 629. There's a 200 EMA at 650 though. So it goes up to about 45. It's so subtle. It's very subtle. But we'll talk about it. So we open up at 29. We get to 44, 45. And this comes down to 29. The red starts to hit the tape. We go from 45 down to 29. And as mentioned, I'm watching it as if the rain is coming to an end. It's very subtle, but pay attention to the tape here, right? I'm watching the way how I trade, and I mention the tape a lot, but whenever I say tape, I gotta kind of remember to keep my vocabulary proper. Because, if I just say tape, you guys might think I'm only looking here and not at the level 2. But I'm watching the bid and the ask, and in the side of my eye, I'm making sure that I'm paying attention to the color code along with what the ask and bid price is. In this case, we're going up, so I'm watching at the ask especially, and I see that we hit 44, and we've stopped going up. The moment we've stopped going up, there's starting to be some sort of resistance or selling. So I'm watching, okay, how far is this going to then dip? in this, even right there, once it doesn't quite go through 44 after that pause, if this was supposed to then get big green and get to 45 like by immediately, because it's telling me then it wants to continue, like the selling is not ready to come in. But anyhows, it's coming down. There's the onslaught, there's the thunderstorm, the red is printing here, and a lot of times this will drop 620, 615, 610. But I'm watching to see where is it going to ease and where is it going to then stop for then that green to come into play. So there's red, the bid, and again we're dropping. So instead of watching the ask strictly, I'm watching the ask price still, but I'm more so focused on the bid here, and then the side of my eye I'm still watching at the tape. And I noticed we went from 45 down to 29, but it's like the red it kind of slowed down a bit. So then I'm in. I'm trying to get in at 29. I'm in all the way at 37. That's how fast it's moving. But it's already at 50. So it's looking like I'm gonna get a winning trade here. It doesn't rip through the level, and so I take the couple cents. Can we hold and continue? I get back in, but here's a seller of 16,000. Can we break through? No. And you see what happened there? If that seller wasn't there, I'm pretty sure we would have got to 60. But this is how you're utilizing level 2 to try and determine the dip trades. Now, in terms of charting, right? Like this BBIG move here. Why is this video like this? Was this two different recordings? This might have been BBIG. Where's BBIG? Did I miss that move? Oh, it looks like I missed it. Jeez. Well, geez, that would have been a good one to kind of review. All right, we'll have to find a different video. But anyhows, in this particular case, it's a little tricky because we break below VWAP by a decent amount. But once we start to curl back up, that's where you could get back in. Once we start to develop that wick, even the 1 minute candle making the new high a little higher up, but potential entry there too. But that's how you utilize level 2, right? And whilst that example is from a halt resumption, every time a stock is dipping is the same content, is the same fundamentals you're looking for when it comes to level 2. So right now we're gonna actually try and find like a chart example. And when I take the losses on level 2, it's usually because in the area where we do dip down, it pauses as if the rain is coming to an end, the selling is coming to an end, but then immediately teleports down. Whenever I take a big loss, it's usually how it goes. But it's also why I don't get frustrated like crazy, because it's also what makes me green. But that's the risk of the trade, It's the other half of what could happen. So it's only natural to kind of get upset about it. It doesn't really make sense. This honestly wasn't bad, but it's below VWAP. I mean, what a choppy stock. I remember there's a nice 3-bar play. Was it this one? Oh no, I don't think so. PIXY. I don't think it was this. This is not a bad entry though, but anyhow, let's see how this played out. So we had a high point of 294. VWAP is around 77, 69. Hold up. I want to watch this entire thing. So I did take shares there, which is good, I guess, but let's see how it played out, right? It's already looking like I had paper hands. Another thing to keep in mind. Another thing to keep in mind is that I also utilize the 5-minute chart, and the 5-minute time frame is much bigger than the 1-minute time frame. And when the 5-minute candlestick is a full body candlestick with good green volume, despite the pullback already pulling back, it gives me confidence to still buy the dip. So it's why at times the 1 minute chart might look crazy. It's like, man, Relentless traders being aggressive here. It's because the 5 minute candlestick looks good, and it's a bigger time frame. The bigger time frame carries more weight. So hold on, my bad. I kind of skipped ahead there. So the low is at 67, and I bought 3,071. Right here in this particular situation, I should not sell this trade unless it breaks below 67, or unless there's a massive seller that just pops up, and in that case I can just, if I think it's enough of a resistance where we can flush, I can sell early. But right here I should be risking to the low of this candlestick and giving it a chance to see if it wants to curl up. It's where the patience does come in, and look at that. So I sold for like 1 cent of gain when we haven't broken below the low of what the support is. This is me being too scalpy on this particular type of setup. So I'm back in 71, smaller size this time, and you see this is not good. That ad is not a good ad, and I'll say why. So I buy it back with smaller size, which what this tells me, what this also tells me is that I was a little uncomfortable. Okay, it actually looks like I got a decent fill on the ad. Okay, never mind. I thought I added 78. And this is very aggressive right there. But okay, this is not a bad example. I'm assuming the 5 minute candlestick is looking good because of how low we came from. We went from 240 to 294, and now we're back at 60 and holding. So we're essentially holding up at least 60% of the candle here. And what makes this trade a good trade is that I'm only risking 4 cents. So this is what we spoke about, increasing your risk to reward ratio and your profit loss ratio. The closer you're into support, the better it is. And Relentless, how do you know that this low is support? Well, I don't know for sure because the stock couldn't make a new low, but we just pulled back from a very high place, and we priced in a low, and we also saw green hitting tape. The red that was there earlier slowed down, and I'll let the entire thing play out from here. The red that was hitting the tape slowed down, and we were able to buy and get in and give the stock a chance. A little paper handsy, but we bought back. So red, red, red. I'm buying in as it's slowing down. That green is hitting the tape, and I'm watching to see how well we can bounce right here. And sometimes too, what happens to me is that I want the very immediate bounce, and it looks like we did hit the low right there. So okay, it's not a bad sell. So it retested the low at 68. So that was actually a good sell. Seems like I was pausing it a little too much. Sometimes you gotta just let it play. So I'm watching here to see. I think right there I could have given it more of a chance though to then cut so quickly. Because sometimes when you sell, it just jumps up 78. It's too late. You already missed the low. But right here, getting back in, I added kind of high. Yes, the ad was a little high. Needed to be all in down there at 71. So I take it off the table, and it's a great trade. I take it off the table. It's a great trade. I think I buy back because the level 2 is picking, the tape is picking up, and I think I thought it might have went all the way back over the high without like pausing again for another break and then push. But it's going to pause again here, and like if this comes below 80, I should be buying back. I don't know if I'll get the chance though. And you can see it looks like it's trying for the highs. Will it go though is the question. No. So small loss there. But I think below 80 right here is not bad for entries. If we can like pop to like 78, 77 and then curl back up. But it's not coming down. It's not coming down a lot. So I'm going to try for 90 again. Are we going to go this time? It got right up to the highs. It's trying though. Like so right here back over 93 is not bad. And that entry was too early. Back over In this type of situation, you have to wait. So there's one of two things, right? The position at 71, once I do get the low right there, I either need to hold that and hold share. Let's say I sold half and I'm still holding shares. But if I'm going to be scalpy in this range, you got to be very precise. And whenever the stocks are doing this, okay, it's holding up around 90 very well. It's showing that it might want to go right here, right now, but it's still not guaranteed. So it's a little bit better to wait for high volume on the tape around 93, so that if I'm buying, I get 94, and then immediately we're seeing 96, 97, 98. It's like the moment we're in, we want to the market price to separate in our favor from our cost basis, limiting our risk, versus buying in an area where the selling can continue to come in or can come in. But yeah, this wasn't a bad example. And look right here, it's gonna go. I'm not even in. This is not good. So it might go all the way through 3, and I missed the trade here. You know what happened to me? I think I let my guard down. So right here, right here. If this holds up above 88.90, this is a good buy to then can we get the retest of 3? So I took it. I'm in a little higher though. 93, I would have preferred 91. But can we get the retest? And I'm taking it off before we break, just in case it does the same thing again. Guys, this particular this same entry right here, this same entry has made me at least like this year like 50,000 plus. That same entry. And it doesn't have to be under this context of being between 290 and $3. It's the same thing with the level 2 and us dipping and the selling coming to an end, and then buying in and then trying to sell higher. And it's why we are so scalpy, because we know with 2K shares, 1K shares, 500 shares, 500 shares, 10 cents, $50. 3,000 shares, 10 cents, $300. And there are days where I'm going to be in and it just goes to 310, Okay, I'm out at the level, but if it holds to try again, I'll be back in. What's it gonna be? Oh, yeah. If it holds high to try, I'm gonna be back in, and this time can we rip? There's a risk of this still rejecting, but I'm gonna give it a chance. And there's the sell right over the level. We would have wanted 10 or 15, but not quite. So is it possible to still be holding from 70? The answer is yes. But if you are, because it's this, don't look at this as a different setup. It's the same setup from buying in at 70. It just comes down to how you feel about taking profits and what makes sense for you to take profits. In hindsight, if I go back in time, I just buy 20,000 shares at 70. Okay, I'm confident, I know it's going to work. But despite knowing if it's going to work, what should give you the confidence is the risk to reward ratio, which is, hey, Relentless, you're in at 71. If the stock fails, you can stop out at 67, 68. I'm risking 4 to 5 cents. The 5-minute candle's looking good, and high of days at 94, which is 24 cents away. If they say, hey, risk 5 cents to potentially make 24 cents, it's not bad. Are there going to be days where you lose that 5 cents? Yes. Are there going to be days where you lose more than 5 cents because it just happens to flush down despite looking decent? Yes. But more times than not, when it's looking strong and the indicators are right, it works. And when it does work, you make that 20 cents instead of losing 5. So it's why we need to be confident despite the fear. Because I do know, and it's why I'm still being so quick to sell, because I know it could still fail. But it could still work. Yeah, and you have to fight the fear to just buy and give the stocks a chance in the areas. But also know that if it does come down, to stop out immediately. And this is how we become profitable over time, right? So despite it not being a perfect sequence, we're still making money, catching it from the lows. And right here, if this holds above 3, I'll be back in again. Let's see. It looks like it's holding. Yep. So there's my entry again. And so Relentless, why do you think it's holding? Because over time, when we make these moves and people are, because think about it, right? We went from 270 to $3. If you're in at 70, if you're in before 70, if you're in at 90, if this thing wants to drop and because people want to sell and take profits, or people want to go short, it's going to come down faster than this. It's going to already be at 97, 96, 95, 94. In which case, if we can hold up like, low 90s, maybe it's a buy, but because the selling isn't coming, it tells me people are holding and short sellers are not aggressive yet. People might still be covering. So I'm going to buy back and I'm going to watch to see if we can get over 10 right here. Let's see how it goes. Look at that. And I'm being even more so aggressive because I'm realizing, okay, it's working well. I need to go in bigger. So instead of even selling at 10, I buy at 10. But I don't know the fills right here. And hopefully this goes to 30, 40 and I'm selling up there. Is that going to happen? Well, unfortunately, look at that. All right. This is what sucks sometimes, is that right idea from myself, but the market had other plans. It should be at 30 right now with how it moved up. So this, you got to be aggressive sometimes when you see it, man. Good, gave myself a good valid chance. It just wasn't, it just wasn't it. But it's why you got to be quick, because look at how fast that came down, right? I mean, it's like it didn't even give me a chance, because I'm selling early trying to just make sure I get out. There's 20. There's green coming in, but immediately it's back at 12. Why? We should be at 25. Look at where the halt up is, at 35. So me selling here, like my brain, the way how it is, I'm always lagging, right? I'm always lagging. I'm always on, I'm always trying to keep up with the market because I'm trying to process this data and react to it quickly. But when I'm selling, like how I was just now, I'm selling under the assumption I'm going to be selling over 20 because of how much green is coming in. This is me being conservative to just try and take profits early as the stock is pushing higher. I don't care if it goes to 60. I already know I'm getting a great trade. I'm comfortable getting out. I'm content getting out above 20. So I think right here the order is actually going through 25 before I see this in my brain, then process again. Oh man, that's gonna be a scratch trade, So I was trying to sell before any sort of real selling, but even then I wasn't quick enough, and that's a scratch trade, unfortunately, But yeah, that was a long review there, talking about buying the lows. Let's move on. So that's the beauty of the archives, is that you can go through most of the videos and you'll find like an example of what you're looking for. I'm just clicking on random videos from my files right here. Okay, we started at 1 p.m. It's 2 p.m. Let's see for the other questions, and then we'll look to wrap it up. I'm glad I didn't do this on YouTube, because then I'd have been giving out too much of the juice. Right? Hello, can you explain the idea of not trading the P&L and how to do this? I'm over PDT, but I don't have a large enough cushion, only $1,000 over. That's why I constantly keep checking. So you're just 1K over the PDT. Okay. The first thing is you have to be comfortable, right? When you're buying and selling, which means right now, if that burden is there more so than it should be, you might be using too much size, because that's one of the fastest way, if you do have a losing trade, to kind of get below the level, right? So what you can do is to start by risking an amount that you're comfortable with losing versus your account size. I think that's fair risk management. Are you watching at your P&L in a way in this case, or let's say your account value? Yeah, but things might be tight. We don't know your exact personal situation. You might not be able to add funds to your account, And so you might be feeling that pressure, that stress, which I think is okay. That's fair, right? We're humans. We can't just say, hey, you're not gonna feel nothing, right? It's okay to have emotions, but you gotta then manage. Okay, so you have to start by using a size that's appropriate to where if you do lose, it doesn't bother you. So think of something that's good, and of course you'll have to mitigate on a stock by stock basis because as we know, a 20-cent stock versus a $2 stock versus a $20 stock are different. Sometimes you'll have two stocks at $2, one tight spreads moving fair, the other one is just, so you still want to do your due diligence as you're trading every day to say, okay, this one is just too risky. I'll size down, or I'll, whatever it might mean, might leave it alone. Start with the share size. That's the first thing. Second, you can remove the P&L off the screen, like Thinkorswim. You guys know, like whenever you're buying or selling, for me, it's on the screen, so you can see the amount you're up on the day, stuff like that. Like if you feel like that's a distraction for you, you can remove it off the screen in the settings. Um, Other than that, like for me, the main thing is whenever there's opportunity, whenever there's setups, focus on the key indicators. Level 2, candlesticks, price action, entries, trend lines. Like whenever there's like, like for example, the trades we're just looking at, there's no way that I can trade this stock here well and be watching at my P&L in these moments, like in this moment here, as I'm about to buy 4,000, 7,000 shares over 12. Like there's no time to even look at the P&L here. So in the moment where you know it's prime time, where we're in the buying point, the buying zone, the breakout point, you got to focus on what's important, your technical analysis, the indicators. Okay, the stock kind of slows down, you're not seeing entries, and then you look over here and see, okay, I'm up $500. I think that's okay, because in that exact moment, the time is not of the essence, and it gives you a benchmark of where you're at. Because sometimes what can happen, you thought you traded well, you look over and you realize, man, my fills were terrible. I didn't make any money when I thought I did. You know, even on that last trade we kind of saw where it's like I would have thought I made money, but it came down so fast, I didn't make anything. So I think that's okay. Um, but in the moments when it matters, you have to be paying attention to the key things, right? But if you need to, take it off the screen. If you find yourself watching at the number moving up and down as you're in the trade, that is no good, because you're not watching at the important things. For example, a big seller can come on the ask. You might need to sell. You missed it for that first half second, which then resulted in extra loss, slippage, right? So make sure you're always keeping your eyes on the price. Where's the other? Okay, there we go. Jeez. Let's see. Coming down. You got to be comfortable as you. This is the same problem with why sizing up is tricky, because when you size up, a lot of the times naturally you're not comfortable, and when you're not comfortable, there's a lot more fear than usual. There's hesitation and frustration and things like that. Especially when you see the trades that you know you would have made money on, but you didn't buy. It's like a cycle that goes on in your mind. You got to make sure to stay cool. Can you go over your trades on ICCT from Friday, what you saw on level 2 when you were buying? Yeah. Let's go over ICCT. I didn't upload this because my I'll show it here. Sorry. My this name that's down here for the sim account is like a security risk. But it's okay. It's all right. I'll show it. Whatever. That's why I didn't upload this to the website. Where is the where is it, man? ICCT. TAOP. Is this the right day? This has to be the right day. Am I okay? There I'm just blind. Okay, so it's halted. Man, this other stock was called out so early. I set it out. I was like EDBL. Okay, I'll take a look at it. Never took a look at it. And this was so early, man. It's like I'm telling you guys, something so small is the difference of me being red on this day versus being up like 2K plus. It's like it is frustrating, but I understand. But it is still frustrating. I can't lie and say it's like, geez, man, why couldn't I just pull up the other stock? That's kind of how the day was for me. Like just ah, sometimes you want to go crazy, but you just can't. You got to keep cool. So we're halted at 983. There's resumption, and you can see the first thing here. Where's my mouse cursor? This is not good. Look at where my mouse cursor is as the resumption is coming up, which means that I kind of forgot the resumption time and I'm not paying attention. That's the first mistake here. Not good. Yeah, and so once it starts to move, then I realize, oh, and you see my mouse cursor now getting across the screen. I'm not looking at the level 2 here at all, which is already a mistake. So 983, man. I think that's a fair trade. Let me talk about what I was looking at when I got long right there. It's the same concept. This stock is just a weaker stock right now. So we resume, we rip, we don't really get a dip, but we rip, right? And I know I keep rewinding it. You guys are probably going crazy. Why does he keep doing that? Let me move my mouse. There's a break of 10 entry right there for the whole dollar. And as we get above 10, we're lingering between 0.8 and about 10.15. And I thought the selling wasn't coming fast enough, so it was implying that it wanted to continue. So the moment I got long, though, it's like the selling finally came. And you know what that did to me? It threw me off. It threw me off. Because where would I have been buying had I not bought right there at the bottom of that flush? So I'm in and I'm out. I tried to sell quickly. I'm still out and I'm taking small size because I know, okay, this thing is like backside from that high of 42, blah, 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 not looking great. In terms of like, can this go to 13, 14, 15? Maybe it goes to like 11 and then that's it, right? So I'm in, first loss. But notice after it drops down, it drops down to the resumption price of 83. Right here in itself is not a bad entry either, with as tight of a stop as possible, maybe 70 if you can. Sometimes we know they'll teleport down and you get that bigger loss, but like right here, if you can be in mid 80s, or let's say even at 90 in the spread, with a tight stop at 70, it's not bad. You're risking 20 cents, but back to the high of day level, there's 20 cents there, plus a potential of a new high of day. But it's still not quite the 2-to-1, right? It'd be better if we pull back a little bit more, like mid 70s, and then it holds up nicely. You in at 80, it squeezes. But anyhows, it curls back up. There's the new high. It gets to 30. It's whole. You see, this kills me, man. What this is telling me is that I'm not confident here. Again, the same concept. Once we get back to this high of day area, there's 30, and then there's 15 on the bids, right? Right, there's red on the tape right there, some red coming in, but notice how it's not really dropping down a lot. We get to 07, we get to 10, it's still holding. But also what's tricky too, and I'll cut myself some slack. The spread is kind of big, and it makes it tricky. So maybe a little bit of caution too. Got to cut myself a little bit of slack, right? Because sometimes it's difficult. But yeah, I think maybe that's what it is. A bit of fear, and the spreads being all over the place like that between 10 and 30 is a little wide. Wasn't confident enough to get in here in that range to be selling up above 40, right? As we got up here at 35. So yeah. But at this point, it's like this this stock is kind of gone. Like, it's like it's a little unfortunate, but it's like I gotta be extremely careful here. One, it's already difficult. Two, I've missed trades that I could have potentially been in. Let's say two entries down at 90, and then again at like between, let's say 10-15. But even those entries were difficult because of how crazy the spread is and how much the stock could also drop. But this is why we just avoid this stock in the first place, man. So right here, it pulls back. I'm watching at it. There's 30. There's 30. I'm watching to see where it's going to stop. I see 29. And I'm like, okay, I think it's going to end right here for the bounce back up to 50. Nope. Comes down some more. And I sized up. I sized up because I said, okay, I think it's moving well. I think we can get some opportunities. I want to capitalize quickly. Nope, it's gonna come down, and look at how far it comes down, all the way to right here is where I needed to switch to the other stock, man. Right there, I should have switched to the other stock because the range here is just too wild. From 54 to $10, like okay, from 54 to 30 where I was buying was good, but why are we coming down to $10? If I saw the other stock, I would have never been trading this stock, man. It's what's happening here is that I think nothing else is moving. And I'm kind of like tunnel visioned into only thinking this stock is the only one giving opportunities, whilst the other one, EDPL, is just all green candles going up from 140. Man. So when it gets back to 68, I'm like, all right, okay, I'll try again. Can we pull back again? Can we hold up this time if we pull back? It starts to go crazy. It doesn't look like it wants to dip. So we get a high now of 80. There's 86. There's 90. And then I start to feel like, oh my gosh, man, are you kidding me? And this, look at that buy right there. It's like the risk on this trade. So right there, I'm trying for break of 11, thinking it's just gonna keep going. I size back down to 500, but the risk here is just so incredible. Like at this point, it's just best to leave it alone, man. Okay, it pulls back. It pulls back. Can we hold up 50, 40? There's 20. There's 20. Like, see, the drops are just too big, man. If you give a move up from 10 to 98, okay, it's a pretty big move. But can we at least hold up at like 50, 40, which is like, half to 60% retraction to then go back up again? But it's back down to 20. And this is what got me here is the range being so big. And I am going to end up giving it a chance. Right there, I wanted to buy. I think I'm going to buy right here. I didn't. See, this is not good. Not good. 22 was the low. I don't know what I just did with my mouse cursor, but I should have been long right there if I'm going to try and buy the low of this candlestick. Going back to the other stock we reviewed, getting in as low as possible to the price that we had and risking at that level. So can I be in at 25, 30 with my stop at 22, and I'm risking 10 to 12 cents max, 10 to 8 cents, let's say, we'll include slippage, let's say 10 to 12 cents max, 15 cents maybe. But can we go from 30 back to 98, which would be 70 cents of profits? Even if I sell at 50, okay, cool. But right here, I'm not buying. I should have been buying there. I should have already been in with my stop in place. So why am I not in with my stop in place? Confidence, lack of trust in the name. And you see, if I am in, we're already at 50, and from 25 to 50 is already 25 cents. If you can get a sell on the ask right here, if this is a strong stock, you can say you're out early. Well, let's not forget this is a stock that's on the backside, and this is more than likely short sellers covering. So it gets to 50. I don't know if it got over 50, but at least it got up there on the ask, which could have given me a chance to even mark it out for like 15 cents. This was a mistake. Watch this. I'm going to increase my size to 1,000. Or did I buy twice? I'm in at 30, so I'm watching the trade at 22. And I thought I bought twice. Maybe I sold and then got back in again. That might have been what happened. And if I only could have been watching at EDBL, I would have been in the right place at the right. So I added. My stop here is still 22. There's 23. I should have stopped out immediate. I should have stopped out. See that? I'm telling you, it kills me to watch this stuff back sometimes because oh, I didn't need to lose on slippage there, to be honest. Like right here, I should have already. And what's happening right now? This is not any sort of like like revenge trading or anything like that. I tried to give the stock a chance, and what I was thinking is like, okay, if it does break down, okay, I'll be selling at 18, 19. But this type of stock, there's no 18, 19. This is just coming teleporting down. So once this red starts to hit is where I say, okay, all right, I gotta get out of here. And boom. Trying to sell at like 18, 15, whatever it would have been. Instead I'm out at freaking $10, man. Too many mistakes. It's why I keep saying the red days could be avoided. But it's like you have to stay so sharp. If you are trading like at 100%, you could avoid some of these red. They'll still happen sometimes because you can't avoid all of them. But I had 9 red days. It could have been cut down to 4 or 5. I'll take that. Cut it down to half. And it's like stuff like this where if you listen to it before I even click to trade it, I'm like, this is just short sellers covering. There might just be a small bounce. You know, I'm not gonna beat myself up too much. I just should have been the energy and attention here should have just been towards the other stock. By the time I get to the other stock, look at how much I missed. Look at what I missed already, man. Like, are you kidding me? So it was halted up before. Yeah, hold up. Oh, I had it up on this screen over here. Like this is absurd to miss that amount of this amount of opportunity from 150 to 250, $1 share of just the stock going up. I miss trading that nonsense. But that's how it goes. I'm only giving my if ICCT, if it was the first day of it going up, no problem, opportunity cost. But because it's the third day and the stock is coming down, the heck am I doing trading that thing, man? Okay, we'll speed it up here. We're at the 1 hour 30 mark, and then we'll end it off. Question about level 2: does it only show limit orders, or do market orders show also? So on the time and sales, I'll talk about both. Okay, on the time and sales, red is selling at or below the bid price. White are the orders in between market orders, and then green is the buying at or above the ask price. In terms of the bid and the ask themselves, the bids are all limit orders, the ask are all limit orders. No market orders will show strictly on the level 2. It's just limit orders primarily. All limit orders. So that's that. Next question. Let's see. Do shorts micro scalp like we do? Yes, they do. In fact, when there's a stock like this that has shares available, just like how I will recognize the dip and then it bounces up for a quick move, I'll go in short once we're high up and it's showing that it needs to pull back. I'll go short the moment we flush down that 10-15 cents, taking it, and then watching now for the pullback entry. So yes, they do. Some of them though will be longer hold time, but yes, they definitely do. Just comes down to if they have shares. Also, what do you think of the active trader ladder instead of level 2? In our community, there's Crispy and Save that really loves the ladder. They do extremely well. They're also more aggressive traders than Marcelo and myself in some ways. Um, these guys will push over a million. If you guys check my share size, my shares, let's say, you guys will see I'm at 379,000 shares per day. If you check Marcelo's, his might be around like 500,000. Crispy's might be at like 900,000, and then Sabe might be over a million, or both of those guys might be over a million. Like they trade a lot. Like when I'm gonna keep increasing my size. Like the goal is to double this number. I need to get to 500,000 by the end of this year, man. That's my goal. That was my goal for the beginning of this year. I'm still behind, but the more size I use, the more money I'll ultimately make. As long as I can continue to stay disciplined. But yeah, those guys, they use the ladder. It's represented and depicted in a little bit of a different way. If you pull out the active trader, for those of you who might not be familiar with it, this is how it looks. Actually, let's do it this way. Uh, Detach, one cell, active trader. This is what the ladder basically is. It's a little bit of a slightly different visual on the level 2. The orders are more vertical, and you see the volume on the left hand side. I'm not sure why it's actually not showing, but it more so shows down here when I click on it. You see how there's this like red, this green and red bar, and then there's usually volume over here. Maybe I have to add that to the maybe from the gear icon customizations. But yeah, it works. I don't use it though. Level 2 has been my bread and butter. But the key is whatever works, works. There is no, hey, this one is better than the other. It just comes down to the individual, what they see, what they recognize, and how aggressive they're willing to be. But if it works for any of you guys here in MMU, great. Utilize it if you're using it already and it's working for you. Can you be a successful trader or scalper without level 2 and time in sales? Yes, we know a guy actually in the community, in the space of like YouTubers. Some people here in the community also don't use level 2 or time in sales or the latter. Like Juan, for example, is strictly charts. Vegito in the Discord, he seems to be doing well, strictly charts. What I do think though is that if for chart traders, there's less entries, not opportunities per se, but entries, because it's a little different. They'll be in holding a little longer usually. I think there's higher discipline towards just holding to the lows of the support rather than somebody like me, being in and out so many times. I think they have more longer hold times, but let's say less trades. Trade halt levels. What are the options for access to halt levels? I use Thinkorswim and don't see them. So don't worry, the halt levels are coming in mid-September as a part of the package with the scanners. Marcelo will be streaming them. I also stream them too in case you guys are watching me whenever I'm live in the live trading section. Whatever stocks are moving, the hot stocks, I'll usually have them up with the DAS Trader platform. It's 150 a month, so it's a little on the expensive side. Some people also will put 30,000 into a Lightspeed account to see these levels, because you got to have a Buff PDT account over there. But yeah, we'll stream it for you guys. Thank you as always. So today we got a little bit of studying into, which is great. When you're watching level 2, where do you focus on? When do you switch from looking at the bid versus the ask? And Pex, this is a question that we had a few weeks ago. But yeah, I definitely understand as more students come in, we'll have some of the questions that will repeat. But yeah, this is a good question. So whenever stock is going up, I'm primarily watching at the ask, but it's not to say that I'm neglecting the bid price, because I still want to make sure the spreads are tighter when I'm watching for a breakout trade as the stock is going up. Let's say break of 10, we're at 90, 94, 95, 96, 97, green is coming in. If I'm not seeing a lot of big sellers stacking up and that green on the tape and the side of my eyes is ripping in, I'm in. But again, we want to make sure the spreads are tight and we're getting the entries that we want. when I'm watching at the bids, it's usually when the stock is pulling back to support. Red is printing on the time and sales. It starts the tape slows down a little bit, and the bid price starts to hold instead of just a new bid going lower, 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 lower. So yeah, that's when I usually will switch from bid to ask. But I'm usually watching both still. Marcelo, in fact, has his level 2 set up to where the bid and the ask price are like side by side. We can pull that up from the course. Let's log in here. Start your education. Sometimes I get logged out. Log in. Okay, there we go. Boom, boom, boom. I also have a student account just for when, like, I gotta check anything out. But yeah, let's come all the way down. MS, the mighty stock trader himself, the man, the myth, the legend. Yeah, Marcelo has his. So the way how he has his level 2, it's like a few different level 2s side by side. I think he had a tutorial talking about how he did this on the DAS Trader video. But yeah, so for him, the bid is here, the ask is here. That way he don't have to stretch his eyes as far apart to see the spread. But for me, like, it doesn't bother me. I'm so used to it being like a little wider apart. But yeah, guys, that'll do it. So take care, enjoy the rest of Sunday. Remember, the markets are closed tomorrow in honor of Labor Day here in the States. So study up if you need to. If you have to do extra studying, study up. Enjoy tomorrow, rest up, recover, enjoy the time. And then on Tuesday morning, we got to be at our peak. We got to be ready. We got to be top form. Top form like Cristiano Ronaldo, or like Messi, like LeBron James in the finals. All right, so take care of yourselves. Eat good, feel good, stay safe out there in this crazy world, and come back ready to go. All right, guys, I am heading out.